Good day, Junior Techies. I'm Mrs. Brimacombe. We are now going to look at budgets activity 3. This activity is going to be split up into 2 videos. The first video, we will focus on question 3.1, and in the second video, we will look at question 3.2. If we look at question 3.1, cash budget and projected income statement, the information provided was taken from the records of Cool Traders. Their financial year ended 31 August 2022. Question 3.1.1. Explain the difference between a cash budget and projected income statement. So if we look at what is the difference, and this is very important to understand. A cash budget looks at expected inflow and outflow of cash. Expected deficit or surplus, expected bank balance, only cash transactions. There's no credit transactions at all. All non-cash items excluded like bad debts, depreciation, profit or loss on sale of asset, discount received and discount allowed. Now when we look at projected income statement, an income statement shows all your income and expenses. It will include your cash and credit transactions. Assets and liabilities are excluded. So make sure that you know what is the difference between the two. Also remember, when we look at projected income statement, we have different forms of ownership. We have a sole trader, a partnership, and companies. Remember that with companies, my projected income statement will include net profit before tax minus income tax equals net profit after tax. Just keep that in mind. Question 3.1.2. Mention 2 incomes that will not be included under receipts in the cash budget. So think about incomes, which is non-cash items. Those are things like discount received, profit on disposal of asset, trading stock surplus, provision for bad debts adjustment. Provision for bad debts adjustment can either be an income or an expense. If we decide that we want to decrease our provision for bad debts, then that provision for bad debts adjustment is regarded as an income. If we decide to increase our provision for bad debts, then provision for bad debts adjustment is an expense. Question 3.1.3. Refer to transaction 1. Number A, complete the asset disposal account on equipment sold. B, calculate the depreciation rate on vehicles. So take note how asset disposal is incorporated into budgets. Now to go through the steps again, a reminder, when we look at asset disposal, step number 1, take out the cost to asset disposal. Step number 2, update your depreciation from the beginning of the accounting period until the day that you are selling that asset. Third step, take out the total accumulated depreciation. Step number 4, record the selling price. Step number 5, calculate if you made a profit or loss on disposal of the asset. If we sold it for more than the book value, it means we made a profit. If we sell it for less than the book value, it means we made a loss. So now looking at the transaction, they provided us fixed assets, equipment and vehicles, the date of purchase, cost price and accumulated depreciation on 31 August 2022. An old tablet will be sold for cash on 30 September 2022. Cost price of the tablet was $12,000. The accumulated depreciation on 31 August 2022 amounted to $7,200. The business is expected to make a profit of $800. So they have not provided us with the selling price. This is why it's important to know your steps in asset disposal and know what goes where. So if I look at step number 1, take out the cost, they provided us with the cost, 12,000. Step number 2, update your depreciation. And step number 3, take out the total accumulated depreciation. So they provided us with the accumulated depreciation on 31 August 2022. We are expected to sell the asset on 30 September 2022. This means that we need to update our depreciation and calculate it for 1 month on the equipment that we are going to sell. So the cost, because depreciation is calculated 15% per annum on cost, which means the cost is 12,000 times 15% times 1 divided by 12. Now we can calculate the total accumulated depreciation. Now, step number 4 is record the selling price. They have not provided us with the selling price. They did say that we made a profit of 800. You should know that it will always appear on the debit side. Now we can calculate the selling price. Because we sold it cash, our details is bank, debit minus the credit side. The balancing figure is my selling price. Now to calculate the depreciation rate on vehicles. They said depreciation on vehicles is calculated using the diminishing balance method. Now if I look at the date of purchase, it was purchased on the 1st of March 2022. Remember that our accounting period ends 31 August 2022. So the accumulated depreciation is 34,000. So to calculate the rate of depreciation, we've purchased it on the 1st of March 2022. So this is a new vehicle. Then it doesn't matter if it's diminishing because it's the first time that we're calculating it. So we will use the cost. From the 1st of March until 31 August 2022 is 6 months. This means the cost, which is 340,000, times X divided by 100, because that's unknown. We want to know what was the percentage, times 6 divided by 12 equals your depreciation, which is your accumulated depreciation. Why? Because it's the first time that we've calculated the depreciation. So to solve X, that equals 20%. An alternative method is take 34,000 divided by the cost, 340,000, times 12 divided by 6 times 100, and that equals 20%. So it gives you exactly the same answer. Question 3.1.4. Indicate amounts in the appropriate block for the cash budget and projected income statement for the month ending 30 September 2022. Now, reminder, our accounting period ends 31 August 2022. So you need to look at which items will go into the cash budget and or the projected income statement. So starting with transaction number 1. Now, reminder with the previous question, we've already done the asset disposal. We had to calculate the depreciation rate on vehicles. So if we look at what have we've done, vehicles, the depreciation rate is 20% using diminishing balance method. We have done the asset disposal. So if we look at, and that was important to take note of, we sold it for cash, which means that this will be an expected receipt that must go into the cash budget. Now, we've already calculated depreciation on the asset which we've disposed of. Now we still need to calculate on the old. Using the cost, we need to take 230,000 minus 12,000, then times 15% times 1 divided by 12. But we're not done yet. Now we need to calculate what is the depreciation on my vehicles. And using diminishing balance method means that we need to use the book value. To get the book value, cost minus accumulated depreciation. 340,000 was the cost minus the accumulated depreciation, 34,000, and we've calculated the depreciation rate is 20% times 1 divided by 12. This means that my total depreciation that we expect in September 2022, which will be an expense, is 7,975. But now we're still not done. Do not forget, we expect to make a profit of 800. Now this is a non-cash item, so it will not appear in the cash budget. This will go to your projected income statement as an income 800. Transaction number 2, the owner plans to withdraw 30,000 in cash for personal use. If we look at cash, it means money will be taken from the bank account. Drawings is an owner's equity account, which means that it will go into your cash budget only as a payment, 30,000. Transaction number 3, projected sales 400,000. The business uses a markup of 60% on cost. 75% of all sales are on credit. The rest is for cash. So if we look at what is happening here, my sales, the total projected sales is 400,000. To work out the cost of sales, we need to say times 100 divided by 160. So we take the total sales times 100 divided by 160 to get our cost of sales. Now, very important, 75% of sales is on credit, which means 25% is cash. So when we're now completing this, 400,000 is my total projected income, my total sales. My cost of sales, we've calculated 250,000. The cash sales will go under my cash budget receipts. A reminder, credit sales will be used to calculate what do we expect our debtors to pay us. Transaction 4. On 1 September 2022, 80,000 will be invested in a fixed deposit at 10.5% interest per annum. Interest is not capitalized and will be received every quarter. So if we look at what is happening here, bank, a payment will be made. We're taking money out of our bank account to invest it into a fixed deposit. 80,000 times 10.5% times 1 divided by 12 will be our projected income from that investment. Interest will only be received every quarter. So we cannot say that we expect to receive interest in September. 80,000 will be the payment that we made to invest into the fixed deposit, and 700 will be our projected income for that month. We're only going to receive the money later on, every quarter. Transaction number 5. The rent paid for the financial year ended 31 August 2022 amounted to 166,560. This included the rent for September 2022. So it means that the rent was paid in advance. The rent contract stipulates that the rent will increase by 8% every year on 1st of November. So to find out the monthly rent, I cannot take that and divide it by 13. Why divide it by 13? because it was received in advance. If we look at our timeline, our accounting period ends 31 August 2022. Rent was paid up to 30 September 2022, but it increased on the 1st of November 2021. Remember, the rent will increase every year on the 1st of November. This means that for 2 months, the rent was at 100%. And for 11 months, it was at 100 plus 8%. There are different ways in which you can get to exactly the same answer. If you're using X, this will provide you with the monthly rent before the increase. Then we still need to work it out after the increase. Or you can say, for 2 months, it was at 100%, and for 11 months, it was at 108%. So I want to know what is the monthly rent after the increase. So to find that out, we're going to say times 108, the total rent paid, times 108 divided by 1,388. So if we add those two together, it equals 1,388. So this provides us with the rent after the increase. So what goes where? The rent was paid in advance, so we cannot indicate it in our cash budget as an expected payment for September. But this is an expense which will be in our projected income statement, 12,960 for September 2022. Transaction 6. Goods were purchased on credit in August. Creditors are paid in the month following the month of purchase to take advantage of a 5% discount. The business is expected to receive 3,750 discount in September. So if we look at what is happening here, in August, we've purchased goods on credit. That will be paid in September. But now, they provided us with discount received, which is an income, the amount of discount that we will receive. So to find out the amount which we are going to pay our suppliers, we need to take 3,750 times 95 divided by 5. And that will provide us with our expected payment in September. Discount received is a non-cash item, so it will not appear in the cash budget as a receipt. It will only appear in the projected income statement as an income, and the amount that we expect to pay our creditors will go under the cash budget under payments. Transaction 7. The maintenance and repairs of 16,000 per month is expected to reduce by 7% during September. So if we take 100 minus 7, that equals 93%. 16,000 times 93% equals the amount that we expect our maintenance and repairs to be in September. It's an expense that must be paid, so it will appear in the cash budget as well as in the projected income statement. In my projected income statement as an expense and in my cash budget as a payment. Transaction number 8. A 6-month insurance contract for 9,000 will be paid on 25th September 2022. 3,000 of this amount relates to the next financial year. The first step, what is important to understand? A payment will be made for insurance. The total payment that we expect to make in September is 9,000. So this will go in your cash budget as a payment. But now we need to find out what is our monthly insurance. So don't get confused by that 3,000. A 6-month insurance contract for 9,000 will be paid. So 9,000 divided by 6 equals 1,500. And that will be our monthly expense, which will appear in your projected income statement as an expense. Transaction number 9. The business has 5 employees. The details for each employee each month are as follows. Then they say, the employee who are owed his August wage will be paid in September. So we're going to break this down now into different steps. First, we start with the gross wage. The gross wage will always go into my wages account, and it is an expense to the business. 1% will be deducted towards the UIF. So 6,500 times 1% will go towards UIF. 5% towards the pension fund. So 6,500 times 5%, that will be deducted to go towards the pension fund. To calculate the net wage, gross minus deductions equals my net wage. Remember now, this is per employee. If we look at the contributions, 1% towards the UIF, so UIF contribution, which is an expense, will be debited, and UIF, which is a fund account liability, will be credited. 10% will go towards the pension fund. That's what we will contribute. This means pension fund, the gross, 6,500 times 10% means 650 will be contributed towards the pension fund. To calculate our total expense, it's the gross wage plus the contributions, and remember, we've got 5 employees, so we need to times it by 5. This equals my total expense. To calculate the net wage, we've calculated the net wage is 6,110 per employee. But because we're going to pay our employee the outstanding wage from August in September, we have to times that by 6 to find what we expect to pay our employees their net wage. But the UIF consists out of the contribution plus the deduction times 5 employees. The pension fund consists out of the deduction plus the contribution times 5 employees. So the total payment we expect to make towards our employees, UIF, and the pension fund is 42,185. That will go to your cash budget under payments. Transaction 10. Trading stock were damaged due to water pipe that burst during August. The total loss was 9,000. The insurance company agreed to cover 80% of the total damage. The money is expected to be paid into our account in September. This means loss due to water pipe burst. We made a loss of 9,000, which was equal to 20%. Why? Because the insurance is going to pay out 80%. The total loss equals 100%. And that is the trading stock that you've lost, the original cost of the trading stock, minus 80%, which the insurance company agreed to pay us out, equals 20%, which is our actual loss on this trading stock that was damaged. So to find out what the insurance company is going to pay us out, we're going to say 9,000 times 80 divided by 20. And that is what we expect to be paid in September. I do not care about the total loss of the trading stock. But that, if you add 36,000 plus 9,000, it equals the total loss of the trading stock, the original cost, which is 100%. Now, this happened in August. We expect the payment from the insurance in September, which means in my cash budget under receipts, I will have 36,000. And that's the only thing that will appear. So we have now looked at all of these transactions individually, how we get to these answers. This is how it will look on your answer booklet and how it will look in your memo. Thank you very much. Next, we're going to look at activity 3, where we're now going to look at question 3.2. Have a wonderful day.